I'm Michelle Soames-Bucher from the Wisconsin Small Business Development Center. I'd like to welcome you to the SBDC Entrepreneurial How-To video series. Today, I'm going to outline common ways to fund your business. The initial funds for your business are likely to come from you. Most entrepreneurs use their own savings and personal assets. Another common source are gifts or loans from family and friends. You may also seek a business loan, which is referred to as debt financing. Loans are available from banks, credit unions, community development financial institutions, and other nonprofit lending organizations. A common question is, what is the difference between banks, credit unions, and nonprofit lenders? Banks are for-profit companies and are either privately owned or publicly traded. They can be national or community-based. Credit unions are nonprofit institutions owned by their members. They can also be national or community-based. And there are also online lending companies for business loans. Along with loans, banks and credit unions can also offer businesses checking and savings accounts, credit cards, and other business services. It's good to note that not all banks and credit unions provide business banking and lending. In addition to banks and credit unions, there are also nonprofit lenders. These can include community development financial institutions, community development corporations, and economic development corporations. These types of lenders leverage federal or local dollars alongside private sector capital. They may be mission-driven, offering loans to support economically disadvantaged communities. Now that you have an understanding of different financial institutions, check out the rest of the SBDC Entrepreneurial How-To video series to help you build your business.